Hi, this is Romeo from Tax Accounting Adelaide, CEO of accounting firm in Newton, Adelaide. This month I'm going to go through, I was inspired by a client who asked me, how do I win the lottery? And I don't know how to win the lottery, but I've got a way of you to come up with $1 million. And the easiest way is to invest. So I've got a little spreadsheet here. I'm going to send this to all my clients. If you start with, and you can play with the figures and start with less, I'm doing a little example here of having $50,000 to start with as an investment. So what you've got to do is, first I just want to teach you, there's two forms of income. One is passive income, which is, you've probably heard about it. It's the one where you've got money that's just earning money in earnings for you. So you're either having properties. So weapons of passive income are things like property, investments, superannuation, etc. And then there's other income called active income. So active income is working really hard at your job or business, and the more work you do, the more you earn. And I'm really passionate that it's great to have a good active income, but it ends up paying your bills, and the more you've got, the easier it is for you to invest. But you really need to invest so that you can develop and create wealth. So anybody who starts to get their mind around compound interest and investing will soon realize that creating wealth is actually a lot easier than a lot of people realize. And so this is why I'm pretty passionate and just want to show you that becoming investing and using the power of compound interest, or using a good weapon of investment such as property, or if you're not sure which weapon of investment you want to use, please feel free to speak to me and I'll help you find that, whether it's property, financial investments, shares, or even if it's term deposits. You'll still do pretty well. So here we go. We've got this little spreadsheet to show you. I often tell people that if you put away $25,000 per year for about 20 years, you're going to have a considerable amount of money at the end of 20 years. And we're just going to simulate this on this spreadsheet now. Enough money to not need to go fill out the Centrelink pension claim form. Definitely indeed, and you won't have to go to Centrelink, which will be great. And you'll also have $1 million. Now there are some assumptions. I'm assuming that you can still go another 20 years. I've based it based on my age, which is 45. If you're a lot older than that, then basically that may mean you need to live longer and work longer and keep investing for still the 20 years. So don't lose hope if you're a bit older. It's never too late to start. Okay, so yeah, I've just done this little scenario. So I've said to invest $25,000. If you think that you can't do that, feel free to get your hands on this spreadsheet and change it to a figure that you think is realistic for you. Or if you need a little bit more help in budgeting to get you to a position to $25,000 to invest every year, then I can help you with that as well. If you just can't do it, then you've got to look at how badly you want to get the $1 million at the end of it. Also, another important assumption here is the return. So I've allowed for a 5% return here, so you can also play with that. And I'm also starting with a $50,000. All right. So if you start with $50,000 and you have a rate of return of 5%, and you invest $25,000 per year, the magic figure you will have at the end of 20 years is, make it nice and big for you, $1 million. Fantastic. Alright, so if you say, what if I don't get 5%? Okay, if you want to invest in current term deposits at the moment, you'll maybe get about 2%. Alright, you'll only have $693,000. Still not a bad effort, isn't it? And if you don't have that $50,000 to start with, you still do pretty well at $619,000. Okay, so is this hard to do? I'll let you answer that question. But can you commit to putting away $25,000 per year? And that's up to you, and I know that most people can do it. You do need to have income for the next 20 years. And you may have kids, yes, you may have mortgages, yes, you may have a lot of expenses and need to. I'm not telling you not to have a holiday ever again, but yeah, if you can invest in $25,000 first and then have those other things after that, you'll be set to accumulating a good amount of money for retiring, and this, I believe, is much easier than winning the lottery. Thank you for listening for this. I hope this really makes you understand that investing is really critical to creating wealth, and a simple thing to do as well. If you need any guidance on this, help in saving or choosing the investment strategy for you, I can help you find that through the right people. So I'm willing to talk to you with that. And also, if you think it's too late and you think it's too hard for you to start, or you have any kind of resistance to being able to do it and you need some help, I'm happy to talk to you. I'm Romeo from Tax Accounting Adelaide. Happy to speak to you and help you with this, and hope you've enjoyed it. Thank you.